What's up, everybody? Joe Brown. This is the Heresy Financial Show, and a couple of big things. Number one, yield curve inverted and stayed inverted. Obviously, a couple of days ago, we had the yield curve, the official 210 yield curve, briefly inverted, and now it is. Now it's back. It stayed. So that's number one. So what does that mean? Number two, we are now seeing what I believe is an epic stock market rally starting to unfold. Despite everything that's going on, despite it looking like that should be the last thing that's happening, we're seeing an epic rally unfold. And then number three, what the heck am I doing here? You can see I'm literally in a hotel room right now. In my last couple of videos, I've been in a different hotel room. And so that's what I'm going to talk about here. What am I doing? So number one, yield curve inverted. So for those of you who aren't aware, the yield curve is what the interest rate is, the rate on debt, depending on its maturity. In a normal environment, the longer you go out on your debt, the higher the interest rate should be because there's more risk involved with that. And so the lender would ask for a higher interest rate to compensate for the heightened risk that accompanies that longer time frame until that debt is repaid. That's how it's supposed to work. So when that flips and short-term debt has a higher interest rate than the longer term debt, something is wrong. And this doesn't happen in free markets. This happens in economies that get bailouts. This happens in economies with central banks that can control interest rates and try and manipulate the debt market interest rates in order to save the economy when something bad happens. Given the fact that we've got so many things going wrong economically right now, investors are looking and saying, we've got a really large chance of something happening soon, something bad happening soon, and we bet that the Federal Reserve will lower interest rates in the future to deal with that. The longer time frame you do have the heightened risk of those bad things happening, but instead of that making interest rates go up at the end of the curve, that makes interest rates lower at the end of the curve now because the market is betting on interest rates being lower because they'll be forced lower by the Federal Reserve. So that's what the yield curve inversion means. It means investors are expecting something so bad to happen, all the investors, big money, small money, everybody, and they're expecting something so bad to happen in the future that the Federal Reserve will have to lower rates in order to rescue the economy. And with the looking at a 2-year time frame, there's a given, a certain amount of risk associated with that. So they're saying, okay, there's a certain amount of certainty that we think the Fed will lower rates. But if we go out to 10 years, we think there's a much higher chance that at some point during the next 10 years, something bad enough happens that requires that. So now we're getting an inverted yield curve where the short end of the curve actually has a higher interest rate. And I don't know the exact numbers. I think it's 9 out of the last 11. The inverted yield curve has predicted 11 out of the last 9 recessions. And so what that means in simpler words is basically that every single time there is a recession, it's preceded by an inverted yield curve. But not every inverted yield curve has a recession following it. It's almost one-to-one, but not quite. So sometimes you do see the yield curve invert without a recession following. But every time there's been a recession, you look back and you say, okay, well, the yield curve inverted. And that's over the last 50 or 60 years, I believe. And the official yield curve that everybody looks at is the 2 and the 10. The 2 and the 10. So other parts of the yield curve have been inverted for a while now. But the 2 and the 10 is the one that that most people look at and say, that's the official yield curve. And right on cue, just a couple of days, it was about a week ago, I made a video about this. The Federal Reserve came out and they said, do not pay attention to the 2 and the 10. It's irrelevant. It doesn't matter anymore. What we're looking at is, I think, the 3-month and the 18-month. And that is nowhere near showing any signs of stress. And so right on cue, they want to make sure that hey, don't look at the data that you think is important. Look at the data that we think is important. And sure enough, within just a few days, the 2 and the 10 inverted. Now, moving on. That is coming in contrast to what's going on in the stock market right now. We've had a rally start, and it looks like we're about to start to see an epic rally. Obviously, I'm on the road here, so I can't throw this up on the screen. If you're on Twitter, go look at Sentiment Trader on Twitter, or go look at my Twitter feed. I've got that. My Twitter account is linked in the description of every video, and I just retweeted a tweet from them, and it shows on this graph, the stock market's going up right now, but it also shows net commercials are long right now. And this doesn't happen very often, and it's happened suddenly. It's just been a huge spike. And so what this indicates is that, smart money, big money, is expecting a monster rally here. The fear is largely gone now. We're starting to see some resolution. The ruble has come back. We're starting to see some negotiations. We're looking at countries all across Europe finding ways to get natural gas, and even countries like Germany that are saying, no way, we're not going to get rubles and pay for natural gas in rubles. Other countries are going to say, yes, we'll pay in rubles, and then they're just going to flip it for a profit to countries like Germany. So Russia's still going to get what they want. They're going to get their rubles. Other countries are going to get what they want, the natural gas and a profit. And then other countries like Germany are going to get to save face because they're going to say, hey, we didn't cave, we didn't backpedal, but they're still essentially contributing to the new system here. Could very well be seeing the early stages of a massive global shift in monetary systems around the world, global, reserve currency, things like that. That's a video for another time. Now, what am I doing here? The last week I've been at a mining conference. It was in Vegas, and right now I'm in Tonopah, Nevada, and tomorrow we're going to be doing site visits for BlackRock Silver and Summa Silver. And so why? What am I doing here? Well, you know that I've been talking a lot lately about mining companies, commodities in general, real estate, real assets, especially gold and silver. When you are heading into uncertain times, you want real savings, which is gold and silver, probably Bitcoin in the future as well. And so you want real savings so that you can buy things at a discount when they crash in real terms. Things will probably not crash in dollar terms, but they will definitely crash in real terms as measured by gold. If you want to get rich off of that, when inflation causes the purchasing power of the dollar to be eroded, the price of gold goes up. That means you preserve your purchasing power. That means the profits of miners explodes. And even without the massive inflation ahead of us, we are looking at a massive super cycle in commodities right now. It's been so hammered. It's been, energy, commodities. These are the most basic needs to humanity, and they've just been slaughtered over the last decade. And so we are seeing a super cycle shift take place. We're seeing a massive shift in going from very little inflation, relatively speaking, to now long period of time of persistent and high inflation. And we're looking ahead, this yield curve just inverted, we're looking ahead and saying something is going to happen bad. Everybody's wondering, is the Federal Reserve and policymakers around the world, are they going to sacrifice the economy to save the currency, or are they going to sacrifice the currency to save the economy? And almost every time in history, policymakers have chosen sacrifice the economy, or sacrifice the currency to save the economy. And when you choose that, you do end up losing both. And one of the biggest examples of them, really not doing that when we got deflation instead was the Great Depression. But keep in mind, that wasn't intentional. The intention was to sacrifice the currency to save the economy. They just didn't do it enough. They just didn't inflate enough. FDR was... You think back about the Great Depression, what our grandparents were going through, the stories that we hear, struggling to put food on the table, struggling to make ends meet, to get by. FDR, look it up, FDR was burning crops in order to push the prices up. Because they looked around and they said, the problem is prices are coming down. Supply and demand, get rid of some of the supply. They were burning crops during the Great Depression to try and push prices up. The Federal Reserve was trying to do things to cause inflation. They devalued gold, or they increased the price of gold. They devalued the dollar, trying to spur inflation. It didn't work. They didn't do it enough. They still got the deflation, but that was their goal. So that was a time period that we look at and we say, oh, well, there was, a lot of deflation, so we don't always get inflation when bad things happen. But look at their goal and look at everything the Federal Reserve has said over the last 20 years about the Great Depression is that we learned our lesson and will never repeat that mistake. So take them at their word. They will always choose inflation over deflation. Could be different this time. It's always possible. We shall see. So what does that have to do with this? I've been talking a lot about miners recently because my goal, really, why I do what I do, why I make videos, I think that it's imperative to understand the way the monetary system and the economy works. It's knowing the rules of the game. If you want to win a game, you have to know what the rules are. If you are playing by rules of a different game, you're going to lose the game you're playing. So number one, we have to know the rules of the game. So that's why I talk macro. That's why I talk economics. That's why I talk about how the monetary system works, because you have to understand the rules of the game in order to be able to get ahead, in order to win the game. That's number one. Number two, my goal is that everybody, as many people as possible, my goal is that you get extremely wealthy. Because the more people who have wealth in the right way, and the right people have wealth, the good people, the better off everybody will be. If everybody goes along with the crash and loses everything, everybody is destitute. But if there are people, you and I, who are prepared, we know how it works, we preserve our purchasing power through the hard times and get very wealthy through to the other side, we are going to be able to help everybody around us. We have an obligation to do so and to help rebuild in the right way on the other side. And I think that commodities, miners, gold and silver are an absolutely massive part of that right now. We're looking at the super cycle. We're looking at one of the best opportunities to invest in some of the most undervalued companies in the world in a very, very long time. This could be one of the best. This is going to be the best opportunity of at least the next decade, in my opinion. I could be completely wrong. It's not investment advice. That's just what I'm looking at right now. And so that's part of my goal here, why I've been talking a lot about miners recently and why I'm here learning about these companies, why I'm going on site tomorrow. I'm going to be interviewing for the channel here. I'll put up some videos with BlackRock and Summa so you guys can kind of see like what it takes, what is the difference between the good companies and the bad companies, and what it looks like on site and what to look for. And certainly you can build a portfolio without any of that, without doing site visits and things like that. But it does help, and it helps to follow the big money as well, which is a key part of this. So this video has been going along a little bit too long here. Just wanted to update you on what I'm doing, why I'm here, and what I'm going to have coming out the next couple of days. And yeah, as always, really appreciate you guys. Thank you so much for watching. I tell you this on every single video, but I really, really do appreciate you guys. You're the reason why I make videos, obviously, because if nobody was watching them, then I wouldn't be making them. And my goal is to help as many people as possible, like yourself, get as wealthy as possible so that we can help rebuild and help our community and help those around us on the other side. As always, again, thank you so much. Have a great day.